We're back with Commodities. Sorry about that. I was just checking some numbers.
I've been checking those numbers for 25 years and for one last time. This is the last edition of Commodities hosted by me, but BNN Bloomberg has some real goodies coming up for you over the next few weeks and months. Let's get to the commodities headlines, though. Capstone Copper shares up about 3%. The company reported a record surge in profit in its latest quarter, as well as revenue that topped estimates. Capstone says results were boosted by stronger earnings from its mining operations, helped, by higher copper prices. The company says it hasn't had any problems due to the Iran war, but it is warning of cost pressures from higher diesel and sulfuric acid prices. Shares in Winpack slipping about 2%. The maker of packaging materials and machines posted profit in its latest quarter that fell short of estimates, and revenue was down 2%. The company also noted that CapEx for the year is expected to be up to $90 million due to equipment upgrades. And shares in Precision Drilling under pressure as well, taking a 10% hit after the oil and gas services company posted profit in its first quarter that missed expectations. Despite the profit miss, though, revenue topped estimates, and there was activity growth in both Canada and the US. And the company says it expects second quarter activity in Canada to be well above last year's levels, supporting demand for its rigs. And checking out how the key commodities are trading today, we are seeing oil down from yesterday's surge, but remember, oil prices are near 4-year highs, threatening inflation throughout the global economy. There are isolated reports of some tankers, including a Japanese ship, actually exiting the Strait of Hormuz. And let's check in on where the metals are trading today. And you can see gold is higher. The Fed leaving interest rates unchanged. And of course, the market doesn't think there's an immediate prospect of an interest rate increase, which it would be seen as bad for gold. And a quick look at the agricultural commodities. And you can see they are down, but crop prices have moved to their highest in more than a year, partly because of soaring prices for fertilizer, because, once again, because of the Persian Gulf disruption. Okay, well, let's talk gold, one of the great loves of our life. And we're joined now by Gerald Panetton, one of our favorite guests, Chairman and CEO of Gold Terra. It's great to see you, Gerald.
Thank you, Andy.
You're known best, you're always on to new and better things, but you're known best for that giant Detour Lake mine in Ontario that ended up in Agnico's hands. What did you find it, or what was your role in that one?
I think I spent maybe 5-6 years on BNN with you from 2007 to 2013.
Yeah.
Yes, from the IPO to gold production in 6 years. Wow. And 30 million ounces of resource, including 16 million ounces in reserve. It was a great find.
Is it the biggest mine in Canada, gold mine in Canada?
It is today Canadian largest gold mine in Canada, operated by Agnico Eagle, who purchased Kirkland Lake. And
what are they at now? What's that mine now? About 600,000 a year?
More than that. They're forecasting to go almost to 1 million ounces a year.
When? By?
Within the next couple of years. They have a plan to, it's been producing for the last 13 years since we put it in production, more than 6 million ounces almost.
What was it when you sold it, when you stopped running it? What was the production?
Well, we were in first year production in 2013, so I don't remember exactly how much gold we produced in 2013, but we were probably at 100, 200, and the following year were 400, 500. It was a great story.
You're moving on now, Gold Terra. You want to revive mining in Yellowknife?
Yes. I started getting involved about 6 years ago. We're in the process of acquiring a property from Newmont, the Con Mine, which was shut down in 2003, $340 gold. Similar to Detour Lake, which was shut down in 98 by Placer Dome, when gold was low, $340 an ounce. What is gold today?
4,500.
$4,637.
Okay.
It's a very good time. With the diamond mine closing, we have a lot of stakeholders support.
Yeah.
They want to see mining coming back to the territories, and I think the support is there.
What would this be, underground or open pit?
It will be underground. We're right in town. There's no infrastructure. We're right beside the town, and I think there's a big advantage to that because everybody can go to Tim Horton or Starbucks in the morning. It's a great infrastructure, 25,000 people almost, and a lot of with the diamond mine closing, there's a lot of guys underground experience from the diamond mine looking for work.
What about the noise and stuff? I guess you'll have to put up barriers, or it's not that noisy.
It's underground.
I guess it's underground. Yeah,
it's underground. There's
like a
blast every day at 3 or 4 o'clock. But we're not going to go and start operating the mine for the next 2 to 3 years, maybe 4 years. So I think there's plenty of time to make sure that we look after the noise.
That's interesting. Will people be able to hear it? So they probably won't mind if it's just once a day.
When it's underground, the vibration of an explosion underground will, because Yellowknife is built on bedrock, you're probably going to feel it. But it's only a very small, even a Richter scale, the Richter scale would work as well.
So what about you gold guys? You can't give up. You just have it in your veins. You just want to keep going.
It's, Canada is a resource country. We have a lot of resource. And for a Canadian to be able to put mines in production like Detour, which actually I brought you a souvenir as your last day, because I never had a chance when we put the first gold bar to give you something.
Oh my gosh, so, what is this?
This is from the first gold bar of Detour.
Can we get a shot? It's a lovely little bit of, thank you. That's a really nice present.
Silver coin.
And as you know, gold, it's created when 2 neutron stars collide. So
we give this coin to every employee when we pour the first gold bar. So
thank you. That's a lovely goodbye present, Gerard. Thank you.
It's my pleasure, Andy. It was a pleasure to be on BNN for all those years during Detour, and I'm very sorry to see that you're leaving, but we'll keep raising the flag for Canada and the territories.
I've heard that when you go to mines almost anywhere in the world, you'll hear Quebec accents.
Possibly. Timmins, Val-d'Or were two big province where a lot of mining development happened before.
Yes.
And Northern Ontario is full of French Canadian or Franco-Ontarien. Yeah.
Thank you very much, Gerald.
Pleasure.
Gerald Panneton of Goldterra. Okay, stick with us. We're talking energy with who else? Eric Nuttall. There are a couple of potential glitches here, and they mainly seem to involve... Woo.
You okay there, Andrew?
I'm fine, thanks, yeah. Maintenance guys fooling around, yeah. Anyway, it's a non-stop party in here. I don't know. Who was that child? There should be some investigation under child labor laws. Okay, the party continues. I hate to leave my 25-year career on a down note. Well, actually, our guest, he could never be a downer. He does say, though, we're experiencing the biggest energy crisis in history. Yet most of the world still doesn't know what's coming. I won't be around to cover it. So for my final TV interview, we're joined by BNN regular Eric Nuttall, partner and senior portfolio manager at 9 Point Partners. Great to see you.
Great to be here.
Let's just get that out of the way then. This massive disruption, a lot of observers saying that we haven't really felt the full bite of the oil shortage yet.
No, we have not. And it's to set the stage, this is by far the biggest energy crisis that anybody alive is experiencing. There remains a lot of apathy in the market because I just don't think people can wrap their heads around it. It's natural when something is so humongous, the human mind just can't grasp it.
Yeah.
Middle Eastern production is down 14 million barrels per day. We've already lost about 650 million barrels or forfeited production already. Even if the Strait of Hormuz were to open up tomorrow, which doesn't seem very likely, we'll lose 1.5 billion barrels of forfeited production. And so what that means is we've got inventories. The reason why all of this complacency is we had the safety buffer of the last of the ships that left the Strait before the closure. They've now reached berth. They've unloaded. So now there's no more safety buffer. And in a world where you've lost 14 million barrels per day, You either have to draw down inventories, which is happening, and even in the United States, we saw their diesel stocks fell 4% in a single week. Gasoline, we're not even in the driving season. Gasoline stocks fell 3% in a single week. We think the global oil inventories are going to reach record lows, like all-time lows in history, by the end of May. And that's even if the Strait were to open up today. So we really, really need a resumption in this. And I just don't think the market can grasp just how severe this is and what it means for the oil price.
Presumably, President Trump's people are saying, you know, this is going to get ugly unless you reach a deal with Tehran.
Very much so. So to lay it out, we think that the oil price in the coming days or weeks, we're not talking months or quarters, in the next couple of weeks, you will have to rationalize demand by more than during COVID. And the only way to achieve that, we're seeing some government interventions, like in Singapore, South Korea, they're mandating work from office because they're work from home, because they're afraid of product shortages.
Yeah.
But I think it's going to be price. And so we see an inevitable, meaningful price spike coming in the coming days or weeks in excess of $150 to take down demand, because we simply can't deplete inventories at a constant rate.
Sorry, Eric, what price did you say there?
We think well in excess of $150 per barrel.
Even the futures market, or certainly the physical market?
Physical is already there.
Okay,
Depending on which physical you want to look at. But we think that as you continue to suck oil and products out of the United States,
yes,
the arb between WTI and Brent and other benchmarks is going to narrow quite considerably. So, and it's wild to see.
For quite a while, Eric, you were more keen on natural gas. But you switched, you say, before the war began in February. You emphasized oil more?
Yeah, we did. So we switched pretty much 100% oil in around January.
Why was that? Why did you make that move?
So recall, coming into this year, we were supposed to have the most anticipated oil supply glut in history.
Yes.
We were monitoring that very, very closely, and we just didn't see it translating. Like, we follow global oil inventories very, very closely.
Yeah.
And so there were spreadsheet barrels, and then there was reality. So we thought that the market was overly pessimistic. Today, we're 100% oil weighted. Wow. In fact, we only have 11 names. So I think it's very, very obvious today what you want to own. Not for the oil spike, but in terms of what the day after looks like. But what does the energy market look like once the Strait of Hormuz opens up? In that world, we see roughly an $80 floor. We think demand is going to be boosted by about 40%, just as we have to replenish depleted stocks, depleted SPRs. And also, we think it's likely that we're going to lose productive capacity, especially in Iraq. Because you've got thousands, you've got 10,000 wells in the Middle East that you've got to bring back on. Many of these are old from very mature fields. So that's the market hasn't even gone there yet either.
So your fund is up, as of March 31st, was up almost 40%. So pretty good year.
Yeah, we're up 44% so far.
Right. And what are your big holdings among the Canadian energy stocks, Eric?
So we would have, again, we only have 11. There'd be 4 U.S. and then 7 Canadian. We do own Suncor and Cenovus, both of which we think, so we're using $80 oil for a frame of reference. So both names are trading at 6 times cash flow, about 12% free cash flow yields on forward basis. We own Strathcona, a name that they're growing their production by 45% over the next 4 years, while also generating enough free cash to give us about a 9% special dividend per year. And once they reach that, they can sustain production for 50 years. We own Athabasca, still a very large holding. It's gone from 18 cents to $12. We think ultimately it's a $20 stock. And especially in the market going forward, the emphasis on security of supply, like the Indias of the world could no longer exclusively rely on the Strait.
No.
And so it's not surprising that they're calling us and they're saying, in fact, there is a business case. There is a demand for more Canadian energy.
Eric, we'll have to leave it. You've got many years ahead of you, though, managing oil money. I know it's your passion.
It is. I'm going to miss our conversations. We've been doing this, I think, for almost 15 years.
Oh, my goodness.
Of your 25. So I'm going to very much miss this.
I've always enjoyed having you on. Thank you very much indeed, Eric. Eric Nuttall of 9 Point Partners. Okay, when we come back, finally, it's time for me to sign off for good.
There are 2 legendary bells for Canadian investors. The morning bell on the markets and Andrew Bell at BNN Bloomberg.
Hello there. Welcome to Commodities.
He is an authority on stocks, investing, tax shelters, commodities, just to name a few. And he manages to deliver that expertise with a charming and smile-inducing style.
There it is, the big nickel. All 30 feet of her, just turned 45, still looking good.
As the Canadian currency rose and fell, and stocks launched and crashed, that familiar face has matured through the decades.
They helped make this show happen. It would have been just about impossible without it.
And now, after 40 years in journalism and 25 at BNN Bloomberg, Andy has decided to ring his own closing bell and retire.
I'm actually grieving a bit. I can't believe how fortunate I've been. I do remember early in my career thinking, is this a dream? I get to just go on TV and talk about stuff that's usually really interesting. I mean, okay, there might be a pipeline company's earnings and nothing really changed, but usually the people are fascinating.
And Andrew started out as one of those fascinating people. He spent 12 years as an investment reporter at the Globe and Mail and began making guest appearances on a fledgling TV channel, then called Report on Business, 26 years ago.
They're spending like drunken sailors.
And he knew right away that TV was where he belonged.
It was so exciting. And I just couldn't believe it. They want to hear from me. This is just great. It is interesting, no matter how tired you are before you go on set, the adrenaline keeps you going then.
It's hard to believe that Andy Bell is retiring.
Kim Barley is the vice president at TD Wealth, but spent many years sharing a screen with Andy Bell.
He's probably one of the most generous people I've ever worked with. He loves mentoring people. He gives everybody credit. Another thing about Andy is he's infinitely curious.
Okay. Tonight, bring home the bacon and
We
fry
only
it.
need one because we share it.
Don't whine at me.
Don't. What did you just do? That's not the thing. Stop it. I mean, he's so playful, right? And everybody loves working with him, especially his producers who don't get stressed at all when they work with Andy. It's really, really great. I kid.
Super Ryan. He's the star producer. Yeah.
I think his great success as a broadcaster is that he is who he appears to be on television.
Retired BNN Bloomberg anchor Paul Bagnall worked with and has been friends with Andrew Bell for over 25 years.
He's full of personality. He loves a laugh. He loves a quip, but he's super smart as well. And I've always thought that was it. The key to his magic on television was blending good humor with smarts.
I do have a crush on Andy.
Okay.
He's my BNN sweetheart.
One of the great things about Scarborough is it has tremendous Asian supermarkets, and these are from Thailand, banana and tamarind, and they're so spicy. They're just painful.
He eats a lot of weird food, and he eats a lot of weird food around people, and it tends to be pungent, so that was another issue in the newsroom.
Andy brings an energy to his reporting that has always been evident. And what's most clear is that he loves the stories. He loves knowing the players and the people. And he really wants to help people understand why. He's literally written books to help people understand how things work in the world of finance and business. And, of course, he brings a little bit of a madcap sensibility to it all. You're never quite sure what he's going to say or do next.
The great thing about Andrew Bell is this alchemy of personality and smarts and aggressive questioning.
You said the high household debt load is the most important risk facing the financial system. But aren't you the man who's to blame for that? You're the one, you're the candy man. You kept interest rates so low all those years. Didn't you? You're the main author of that bubble, aren't you?
Have you considered resigning and handing over to somebody else who could solve this thing?
He's no pussycat, that's for sure.
What's next for Andrew Bell might surprise you.
I have a long-standing ambition to try longboarding, you know, the big skateboards. But you can see where that would go wrong quickly. A man of 66. I'm going to have adrenaline. So I'll go into community theatre again, because that's a good source of adrenaline, especially as opening night comes near.
You shut up. I'd say I'm going to miss you, but I think actually I might end up seeing you more. So this is actually good news for me. But for the viewers, I know they don't get to see you as much. So I hope for their sake you show up somewhere else, maybe in a hobby, doing something else, maybe a podcast about cheese. I know you want to. Happy retirement, Andy.
Look at your hair. Are you having a nap?
No, I missed my nap so far.
I'm one of the lucky ones because I'm going to see a lot more of you. We are buddies, and we'll do lots of things together. We'll go to plays, we'll go to movies, we'll have dinner. All the best to you, Andrew Bell.
Together. That's a hug.
Andy, congrats on an amazing career, and no, you will be very missed.
Why do you have like an 8? What is this? Why do you have 2?
Oh, it's a long story.
If you have makeup wipes at home, close the case. They dry out. You keep leaving mine open. All the best in retirement, Andy. I'm going to miss you.
We're for sure going to miss your depth of knowledge and expertise on so many different topics, and of course, your sense of humor, but really looking forward to what comes next for you.
So I so appreciate you.
Oh, thank you. Oh, my God.
What are we going to do every day?
I know, really going to miss you. You're one of the people I'm really going to miss. Yeah. Oh, I know. Okay, so I got to thank my colleagues, incredible. I'm just the meat puppet here, and they do the work. And I got to thank the control room and the directors for their incredible patience over the years. Me running in, hair askew at the last minute. There they are. They are the Dreamweavers who put this together. And then the producers of Viva Los Producers, Mike Attenborough, longtime Commodities producer. Paula Sanderson is doing the show today. Oh my goodness, Ryan Miller. I don't know. Can we get a shot of Ryan Miller here? He's going to hate that. But Ryan Miller, Paul Bagwell played tribute to him as well, and he has been just an amazing force. Terry Kane, all the veterans that I've worked with over the years. Thank you, guys. Charmaine Wong, now the boss of BNN Bloomberg, relatively new, wonderful boss. And I'd like to thank all the guests who've been patient over the years, especially when I really didn't understand the topic. And the worst nightmare is, of course, you're trying to, what am I going to ask yet? And you ask a question they've already answered. But also for you, the viewers, I just want to, one time I picked up my daughter at elementary school, and she was excited to see me and laughing. And I thought, this will last forever. She'll always be there, happy to see me. And it's a bit like the Mad Hatter's Tea Party in Alice in Wonderland. It's always 6 p.m. The tea party never ends. And so for me, our years together, it will be like I'll be sitting here droning on, and somewhere in space-time that'll occur forever. And I'll be grateful to you for listening to me. Thank you very much. So, look, here they are, the gang. So I'm going to hand you over to the close now. Oh, Jamie Mac.